Hey traders, welcome back to the channel. In this video, we're going to talk about the G Group, ticker symbol JOB. Now, I made a video on them last week talking about how it was my top penny stock for this upcoming week because of the potential for a massive gap up. And, we saw the potential there. We had our breakout chances multiple times throughout the week, yet nothing came about it. So I'm here to do an update video with an updated chart telling you whether we could still see that breakout or not. So without any further ado, let's hop right into the video. So as you can see here, this is the updated chart for JOB. There's a few more lines drawn in compared to last week where my only line was the 63-cent marker, which served as resistance at the time. And the reason being that if we broke above that 63 cents cleanly, based on the historical data, like you can see right here, there is no resistance stopping the stock from gapping up into the 80-cent range, which would give us, easy 25 to 30% gains. However, after this week, the chances of that are a lot less likely. Starting on Monday, we saw that clean break above the 63-cent range and we pushed to new highs, which is right here, this new resistance marker at 64.75. And unfortunately, that's where the fun stopped. And on Tuesday, we saw another chance, more volume. We broke above the 64.75, set a new resistance here at 66 cents because once we got above this one, we weren't able to break out and gap up. And the same thing happened on Friday. Another huge push, massive volume, made it all the way up into the 67-cent, almost 68-cent range. It really looked like we could gap up, but nothing came about. And unfortunately, when it comes to stocks, when it comes to these breakout gap ups, you only have a finite amount of opportunities. And, JOB had all the chances in the world to kind of realize that gap up. It had big volume, it had everything it needed, and yet it didn't happen. And unfortunately, as a day trader and a short term swing trader, I no longer see this as a viable play. I do think there are several benefits if you're looking at it long term. The number one thing being just look at the institutional buying that's going on. We saw another massive 13G filed late last week. And so, if the institutions are buying heavily into it at this price, it probably means that long term, they think it's going to go up quite substantially. And I believe it will as well, but I don't think we're going to get that gap up. I think if it were to go to the 80-cent range, we're going to continue to kind of see this stair stepping upwards like we are currently seeing. That being said, looking at the chart, these are going to be your resistance and support levels if you are still playing it. 63 cents being the current support level with resistance at 64.75, 65.75, and 67.50. If it does break above this on Monday or Tuesday, there is still potential for that gap up. I just don't know how likely it is. Looking at the indicators, I'll take a look at the VWAP here, this yellow line, the volume weighted average price. JOB unfortunately did close below, so that means it's in bearish territory headed into the next week. So yeah, it was a great setup. It was something that, I hope many people found a good dip to buy on, and just in case that gap up did happen. But unfortunately, nothing really came about. So let me know whether you agree, whether you disagree, whether you are a day trader like myself who was hoping to play this for a gap up, or whether you're somebody who does believe in the long-term growth of this company and are just going to hold the stock because it probably is at a pretty heavy discount right now. Other than that, if you have any questions, let me know. I'm happy to answer them. If you like this video, please leave a thumbs up. If you want to see more content like this, please subscribe to the channel. And other than that, have a great rest of your Sunday.